These macroeconomic charts will blow your mind. Let's dive right in. First up, here's the setup. The Fed is hiking further and faster than any time in modern history. This is the backdrop and the most important chart because it shows how rapidly they are pumping money. There's a reason they don't do it this rapidly, this often, because it breaks things. So let's dive through, go around the world, what is actually going on. Because of that massive move in interest rates to fight inflation, blue chip US credit is having by far the worst year ever. This is a problem. The economy runs on financing, borrowed money. If blue chip companies' debt is having the worst year in history, then what is happening to the companies that aren't blue chip? Well, this shows the rising share of companies with debt servicing costs that are higher than profits. US share of zombie firms is very unfortunate, but we're seeing 20% of companies with debt servicing costs higher than their profits. They're not making enough to pay off their debt because interest rates are spiking. This is the sad reality of what is going on. It's happening everywhere. And so we're seeing these guys not able to refinance. And if they are refinancing, it's going to be at a lot higher rates. And so lo and behold, cost of insuring against Credit Suisse credit default swaps spiking back to financial crisis levels. The financial system is breaking apart. And so because of this move, because it's starting to break apart, we're starting to hear dovish talk from European central banks. So they are choosing to debase their currency to prevent all-out economic collapse and depression. And so we are starting to see hyperinflation. Here is the UK 5-year credit default spread price. Again, just skyrocketing. It never stays up here very long. The governments step in, print money, debase the currency. Right now is a very unfortunate time to be doing that because, again, inflation is raging out of control still. So we're in uncharted waters here. We have massive inflation. They're unable to contain it, and they're just letting the lid off. Now, normally that's good for risk assets, but we'll see the repercussions of that. Will the Federal Reserve be able to keep a lid on? Probably not, because everything around the world is breaking. Global bonds and stocks see biggest ever loss in market value. This is a huge deal, worse than the 2008-2009 financial crisis. The biggest bubble in global history is unwinding. Now check this chart out. Federal government current expenditures interest payments. This is the US government interest payments spiking to an all-time high in billions of dollars. And so the reality is that this spiking move in interest rates is not sustainable. They tried it to fight inflation. It seems like they are going to have to be losing the war on inflation because this can't last very long. We're seeing massive instability. And I don't care if the European central banks are able to contain the contagion in Europe by printing money. The US dollar is the reserve currency, and that is spiking right now in value. And that's the great global wrecking ball. And so speaking to the failed war on inflation, Dutch inflation rate soars to over 17%, according to European figures. That is hyperinflationary levels. Absolutely unbelievable. Just imagine a year later, your bank account being worth 17% less. We know it's probably higher than that. Here's another chart showing US core inflation, sticky. So we're hitting the crossroads here. This is what we've been leading up to. This is what Peter Schiff has been talking about for years. There's going to be a time when they need to contain inflation and they can't because the world is falling apart. And so they make the ultimate decision that governments around the world have always had to make, which is debasement over depression. And so those are our two scenarios. Either the federal government crushes the global economy, sends us all into a Great Depression where people are starving on the streets, or they debase the currency, do a yield curve control, assets will spike, inflation will not go down anytime soon. Maybe they'll have some sort of preventionary measures, but the people at the bottom will suffer, the people who actually live off US dollars and don't own any assets. We're already starting to see this happen. US Fed Reverse Repo facility use spikes to $2.4 trillion. Absolutely getting inflationary, hyperinflationary. Now, I don't think we're going to become Zimbabwe. That's what everyone is missing. We're not going to become Zimbabwe because if you look throughout history, when great currencies are debased, I'm talking great empire reserve currencies, when they're debased, It doesn't destroy the country. For instance, the United Kingdom is still around after World War One, World War Two, after collapsing, right? Real estate values are still high. It's still around. All it does is drastically weaken the empire. Now we'll see how it plays out, but let's see, how are we going to play this information? Because the reality is everyone knows how bad it is. Small trader put buying is hitting an all-time high, highest number of puts since 2000. This, unfortunately, is the uninformed money. The fear-driven chart chasers are buying puts in record numbers. This does not end well. So what's probably going to happen is the Fed is going to come out, say something dovish. Maybe we're going to halt hiking interest rates. Maybe just a halt in hiking interest rates could cause enough positive sentiment for us to rally into the November elections. That is very realistic, probably the most likely outcome before everything unravels and the Federal Reserve has to massively stimulate and debase the currency. We'll see. We are in the end game. Here is one bonus chart: commodity producers capex cycle adjusted for GDP. This comes from Tavi Costa at Crescat Capital, just showing how little money is being put into natural resources. Now, hey, if the US government decides to send the world into a global depression, then we're not going to need natural resources. But the reality is, if they start to stimulate and we get inflation, then hard assets are going to do extremely well. And just go look at how hard assets did, commodities did after the 2000 tech bubble. They absolutely skyrocketed because that was the 2000 was actually the start of the massive monetary easing program that we are now in the end game of. And we'll see, we'll stay on top of this market. Thank you guys for watching. I hope you appreciate this content. This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky and you can lose lots of money in them.